is with DSP Mutual Fund. Let's take our conversation forward, understand which way he feels markets are headed and where is he picking his spots. Vineet, good morning. Thank you for joining us.
Hi,
Uh,
good morning.
in last couple of days, confidence has come back. Markets, in a sense, have cemented some gains. Crude prices are down. Do you think worst of the print is behind us for 2022?
Okay, so I think good morning, first of all, everyone. And I think from the market's perspective, there are, let's say, three important things which has positive things, I would say, which has actually happened. One, most of the commodities, be it soft commodities, largely metals and agri commodities, and we've seen softening across the board. So I think that is positive. Oil is still above 100. I think once we have a decisive, move oil coming down below 100, that should be quite positive for India as such overall. The second is, the monsoons have really picked up well in the last, let's say, 1 week, and now from a deficit, I think we are looking at a, excess over the long-term average. One important factor which is ailing us is the rural side of the demand curve and the low end of the demand curve. I think once we have that part of the category, coming back, I think that should help overall demand conditions is what I feel. And the third is, we've seen the FII flows, outflows, the pace of that has cooled down a bit, so which is positive. And I think as commodities start coming off, even the foreign investors will keep looking for large emerging markets where they would have better visibility of growth. So from that perspective, I think these are three important events which has happened and which has got recognized by the markets. But at the same time, are we out of the woods in terms of the broader macro picture? I would say still no. We will have to sail through this next 1 or 2 quarters where we will see the volatility remaining there. But interestingly, what we've also found is that when the market's correct, it keeps providing good opportunities for really long-term investors to accumulate and buy good companies. So, which is what we are going to do. I think the next 1 or 2 quarters, maybe the some bit of the volatility continues. Maybe we are in a range largely, and that also gives throws up a lot of opportunities. Is what I feel is my thought.
Vineet, one side I look at the bank credit. The bank credit, auto sales, numbers from Bajaj Finance, what Avenue Supermart is indicated, they all are indicating that there is no slowdown in the retail part. There is no slowdown in the demand part. So do you think markets are unnecessarily worried about the inflation impact? Because so far we've not seen any evidence of slowdown. GST collection, auto car numbers, numbers from Bajaj Finance, credit offtake, they're adding up to robustness. I'm speaking like a fund manager for a change.
No, I think you're absolutely right. I mean, these are if you actually also see some of these numbers have started showing up lately, last 1 or 2 months. Auto has started picking up, the bank credit has started picking up. So I think those are initial sign. What I was trying to also maintain is that one side of the economy which was languishing and that was showing in terms of the numbers, the rural side of the economy, which is actually being seen in, let's say, the FMCG guys when they try to break down their business outlook. They clearly mention, how there has been, down trading which is happening from the rural side. Those are the segments which are under pressure. I would say broadly, the one side of our demand momentum still continues at the medium and the high end probably. Added to what you were saying, the real estate sector is also doing well. If you look at the June numbers, and I think the building material as a category should be broadly fine, is what I feel. But just to add to your commentary, Nikunj, I will just again go back. I would say that things can improve once we have some of the factors which drives the rural side of also adding up, I think that should improve. And inflation broadly should come under control. We've seen, with these kind of prices, it actually causes a lot of panic across the countries, and we've seen that happening across few countries. So I think this should find its normalization curve is what I feel over the next 1 or 2 quarters, and which is where I'm saying that maybe things at the margin have started improving. One should not have a very pessimistic view and just try to think from a long-term perspective.
And the trick is to stay invested also, right? To make money. Good morning. This is Nanta joining in. So while that theme exists, stay invested to make money, can I ask you the recent corrections? How did you folks take advantage of it? What all did you buy?
Yeah, so clearly, I think what we've been doing is that we've actually looking at the valuations, and wherever we believe the valuations are sort of correcting down to below their long-term averages, maybe 5-year or 10-year numbers is what we look at. And for good companies, good businesses which have strong long-term potential, we try to keep building those in the portfolio. So maybe let's say from the pharmaceutical pack, from the cement pack, which has seen some bit of correction. Gas utilities as a category has seen correction. Banking stocks, we have been quite positive overall, and we keep looking for opportunities there. And lastly, I would say even the technology sector, while there are worries about global recession and what harm it can cause, but I would imagine that the technology, Indian IT companies, if not 12-13%, they will keep growing at 8-9%, and that's a decent growth for the kind of balance sheet cash flows they generate, for the ROEs and dividend they pay out. There are a few large cap names within the IT sector where the dividend yield has come up to almost 3.5 to 4%, which is a very decent number. So gradually that's also one segment where one can think of building exposure is the overall thought. And lastly, as I was talking about the rural India, I would say the agri related segments is one which one should focus on now. There are agrochemical companies which have been languishing for a while. I believe those should start doing well as some of the inflation pressures also abates going forward.
Okay, you're liking agrochemical sector. You're talking about also in a sense about rural, the demand, and one getting a sense that inflation is peaking out. So I know Nikunj touched upon this. Would this be then a good time and continue to be a good time for FMCG? We've seen the leadership return to that pack.
Yeah, so just one bit of which is the valuations at which these stocks are today trading at. I mean, we've not seen enough correction there in the phase where they were facing inflationary pressures. So that's something which really bothers us a bit, and which is where we are slightly underweight. But you're right. Once we have some of the rural side of the economy start doing well, I mean, this is one sector which will also pick up as far as the demand is concerned. At what valuation one should look at and what valuation one should buy, I think that is individual's choice. But we are slightly, underweight at the moment in that segment because of the valuations.
Vineet, hi there. Good morning. Wanted to also understand, I know you've touched upon a lot of sectors and themes that you're looking at. But given that in the long-term view, you've always had that very positive bias towards the mid and the small caps, how are you looking at the performance of late in terms of the catch-up and all of the metrics vis-a-vis the large caps of late?
So clearly, I think what we, in the last few months, our observation has been that the small caps have really corrected much more than the large caps and the mid caps as well, and which is where I believe that segment is looking slightly more attractive as compared to, let's say, the mid caps right now, because of the significant relative correction which we've seen there. In fact, just when we are looking at the broader set of companies as well, we find that within the small cap pack there are slightly let's say, more opportunities which seems available in terms of reasonableness of valuation, and which is, I feel that relatively the small caps looks okay from the investors' viewpoint. Mid caps, I think, will be aligning to how the overall demand curve moves, because large part of the mid cap is still probably trading at fair valuation to slightly higher valuations, is what we are observing. And there are only very few categories where we are seeing relative reasonableness in valuation as far as the mid caps are concerned. So I think relatively the small caps are making slightly more sense from the investment perspective, is what I would say.
What about the healthcare space? Given the fact that you have seen a lot of diagnostic companies as well in the spotlight of late due to the pandemic, do you believe that they are long-term growth stories to focus on?
Uh, they are, they have a good long-term matrix, but I think we need to see some bit of the normalization from the business perspective. We've seen, during the COVID, they were extraordinarily benefited. I would believe that one should, keep them under radar for the next 1 or 2 quarters and see how the businesses normalizes, where they settle. And then I think, depending upon how one derives comfort in terms of the valuations, one can take a look. Surely they are, the outlook there is good for the long term, but I think in today's relative scale, we are finding the pharmaceutical companies are more attractively priced versus some of the hospitals and the diagnostic labs. So I think, on a relative basis, we would prefer being present in the pharmaceutical companies rather than the diagnostic labs at the moment.
Vinit, so what should be the overarching theme for next, let's say, 2, 3, 4 quarters? And let me just put this question in context for the benefit of our viewers. What I'm trying to understand from you, what we are trying to understand from you, Vinit, is, let's say if you bought into IT or anything which has got to do with digital immediately after COVID, you hit a home run. If you bought pharma that time, you hit a home run. Considering that right now the dynamism in the world has changed, money tightening, high inflation, what could be that overarching theme, let's say, for next 2, 3, 4 quarters, which in a sense is going to be the leadership theme?
So I would clearly, whatever analysis we are doing, I think automobile is one segment which is seeing good positive change from, really a very low cycle which the sector has seen in the last 2 to 3 years. And I think that sector is emerging well. Valuations are looking relatively okay across the auto OEs and the auto ancillaries as well. So I think one needs to create a good basket of auto OEs and auto ancillaries. So that's one clear category where we see positive change, at least for this year. I was talking of the agri theme. I'm getting quite positive on the agri theme for this year. This is one theme which I would sort of bet on, and I would say that the agrochemical stocks which I was talking about are trading relatively, at good levels and a good time to enter there. And lastly, I would say healthcare is one segment which has been languishing for a while. The stocks are now trading at below their long-term averages. That is one. They're good cash flow generating companies, and available less than 20 times multiple. So I would say these three segments broadly should be one should really look at from this year's perspective. We keep having good positive long-term view on banking, IT, but I mean, on a preference basis, I think the three sectors which I mentioned is what I would see them as a theme for this year.
What will happen to some of these so-called value themes, utilities, and PSU, high dividend yielding stocks? They've done rather well this year.
Right. So I think we are again pretty selective there. I think the gas utility companies is something what we own, and we believe that there, because of the adverse economic environment right now, the natural gas prices are very high. I think these companies have again corrected down to decent levels. I think that's one thing to focus on. There are defense plays which one can think about. I think beyond that, one has to be very careful in terms of how one is investing capital. This year, particularly, we've seen in some segments. I think there are regulatory changes which actually because of the fiscal pressures and all. I think there could be some regulatory changes which may prove to be adverse for some sectors. So one has to be very careful while picking stocks there, and not likely to segments which are not likely to get impacted if there are any changes from the government because of the fiscal pressure. So I think that's one small element which one has to keep in mind.
Okay, Vineet, we're going to leave it at that. Thanks again for being live with us. Vinit Sambre there with his take